Good morning, everyone, and welcome. My name is Steve Torso, the founder of Wholesale Investor and CapitalHQ. So good to have everyone joining on the session. Now, I'm actually joining from the UK today, so it's a great 8 a.m. here. And I know many of you are sort of joining from Australia and Singapore and sort of different parts around the world. So this session is, I said it's correctly titled in how to get the most out of CapitalHQ and generative AI. And it's, basically whether you're a paying subscriber of Wholesale Investor and CapitalHQ or you're on the starter plan, the purpose of this next hour is for you to get the absolute most out of it, right? So now inside of that, I am going to be teaching some principles around capital raising, and I am going to be, because this is something I've become super passionate about. So I'm going to start with this, which is not in my slides, but something I've been sort of, I suppose, thinking about for some time now. There's 5 elements to a capital raising process. And I just recommend you write this down because it will sort of really help you across a number of things. And, I said, I'm going through my own capital raise right now. And the best thing about doing your own raise is you are in the moment learning things, right? And I'll give you an articulation on that. So the first part is you've got your capital raising preparation, right? And I'll sort of cover that in the presentation. The second part to capital raising is the positioning and how you actually communicate. Next one is investor access and engagement. The third part is your actual capital raising process. And then the fifth part is your actual capital raising strategy. Now, I start off with that is because when most people think about talking about capital raising, they've got this absolute wrong idea that capital raising is just a process of, oh, let me send out my pitch deck and wait for money to come back in. And the more I think about it, the more angry I'm getting about how this entire ecosystem has geared people to believe that the pitch deck is the magic be-all and solution that is actually not, right? And when you think about those 5 elements that I was talking about, to me, we've obviously built software to help with the investor access and also the investor engagement component, right? And now I've started to do a lot of work on sort of helping people with their positioning. But, investor preparing for a capital raise, getting your positioning statements right, sometimes that's actually more important than everything else. Getting your positioning statement right can be more powerful than your actual pitch deck. And then all the rest of it. And then capital raising strategy, the easiest way I can differentiate between capital raising process and capital raising strategy, or I suppose maybe capital raising plan could be another word, is that you imagine a football team, right? Every game, they've got a plan, right? They've got a process that they've got a plan that they want to execute, for how they want the game to play out. But then during the actual game, there's a whole bunch of refinements that you have to make, which really comes down to strategy. And effectively, the way you do things, the way you time things, etc., becomes super, super important. So starting off with a rant for the session, but I hope you took notes on that because it does fall into context, everything else that I'm going to sort of cover today. So I'm going to go through a bit of an introduction. Obviously, then I'm going to go through the workshop. We're talking about sort of setting up your own sort of capital raising, your CapitalHQ room. And then also I'll finish with understanding investors and then also how to utilize generative AI. If you are not using generative AI, and just to let you know, like I'm a subscriber now across ChatGPT, Claude, which is the Anthropic version, Perplexity AI, Gemini, like I use Grok, I use all of them. And the reason is because I just think it turns all of us into superhumans if we let it. Right. So I'm a massive fan of utilizing generative AI, as part of what we do. The why behind this, and I'm just going to remove my chat box because I can't see. If you do have any questions through, just please ask and I'll do my best to answer them at the end. Normally I try and answer it while I'm going, but I've only got one screen because I'm in a hotel room today. So it makes it a little bit difficult for me to answer whilst I'm actually sort of mid-session. But these are the motivations for me when it comes to capital raising. And also teaching about capital raising. And the biggest thing I'll have to say is that the more I think about it, the more I think about the whole ecosystem has been geared towards effectively teaching companies how to create a pitch deck and how to pitch VCs. And the more I'm involved in capital raising, the more I raise capital for myself, I just realize, and the more I speak with people who do it, you just realize what a massive myth that actually is. And then I think, imagine going to an investment banker who typically they raise tens, hundreds of millions of dollars and going, hey, Is your capital raising process a process of creating a pitch deck, sending it out to a bunch of people, and then seeing if you can raise money from it? So this is where, really I sort of want to help sort of create a narrative to really help. This is us, this is what we focus on as a mission. Everything do is about creating opportunities for tomorrow, right? And everything I think about, whether it be from a software product perspective or whether from an education perspective, our outcome is to help people raise capital more efficiently whilst reducing the cost and the emotional aspect, the frustration part, because capital raising is a game of anxiety. It's a game of frustration. It's an emotional roller coaster, etc. So we'll kick straight off into the workshop, and I always start off with this as a reference, right? And it's just a reminder for people. And I don't care if you've seen this presentation or this slide, a few times, because it's always that reminder that, even someone like Blackbird, that when they were actually kicking off their first fund, they had to do 500 meetings to get 97 investors, and they raised $29 million as part of that. So when you break that down, they had a 1 in 5 success rate of every person they met with, right? And out of that, you can imagine they would have sent at least 1,500 to 2,000 emails to get those 500 meetings. And then effectively, their check size was typically around the 300K mark when they would come in on average, right? Now, obviously some were more, some were less. And the reason I like to articulate that is because people have this wrong perception about, how much sort of high net worths or family offices like to invest when they're going into opportunities. So I'm going to start off with smashing some myths. The first one is it only takes 2 to 3 months to raise money. The truth is fewer than 5% of companies are actually able to achieve, that as an outcome, right? In fact, now I literally haven't come across anyone that's been able to achieve, to finish a capital raise within a 2 to 3 month period, right? From end to end. People may position it like it's taken that amount of time, but the reality is typically from an end-to-end scenario, it takes longer than 2 to 3 months to actually raise money. And then the next one, that I think is a super important one is that VCs are the main investors. I was doing a talk for, I was kindly enough to be invited to do a talk for an accelerator, right? Or an accelerator program. And it was a deep tech one. And it was really interesting that a lot of, one of the attendees come up after my session and they said that, it was so refreshing to hear the importance of that investor relations, because effectively everyone was being trained on how to put together a pitch deck and how to approach VCs. And no one sort of logically sat there and thought, well, how many deep tech VCs are there in the country? And the reality is, I think there's 2, right? There's other groups that run programs sort of in that area, but as far as so effectively you're gearing people up to pitch to 2 people. And if one of those says no, then you're all out, right? And the reality is a lot of the deep tech and, life science and, so forth has been funded by high net worths and family offices, etc. So the numbers actually don't make sense, if you think about it, between media, everyone is telling everyone about how to just go. And if you can get VC funding, fantastic, right? I'm not going to deny anyone. The reality is that is 1 in 100, right, that get approved by VCs from an investment perspective, and maybe up to as many as 1 in 500. And then outside of that, out of the VCs that invest into companies, they're only really going to do real follow-on support for likely 1 in 10 of those. And this is their numbers, right? So effectively that game is a 1 in 1,000 to 1 in 10,000 scenario, right, for a lot of companies of what success actually looks like. And that's the power, that's the power law effect when it comes to VC. But if you want to put that into perspective from a capital raising perspective, I just want to set some framework from a starting point. This is what you will feel when you are raising money. It is the absolute wildest emotional roller coaster ride. Unless you've sort of done it before, you basically, it's this process of when an investor says that they're going to go ahead, you're like, you're bulletproof, you're the man, you're the woman, you're the king for that day. And when they say no, it's like you feel like the biggest failure, or when they're ghosting you, or when you feel like you've had a productive first conversation, then they just suddenly disappear, right? And for me, my days are, investors always say to me, introduce me to the good deals. My reply is, what is a good deal for you? And then on the other side, companies always say, I want you to introduce me to the good investors. By the way, this still happens every day, right? And I'm like, well, I can do that, but how do I know that they'll be interested in you? Because there's plenty of good investors, but it's all about relevance. And it's a simple thing of is you've got a business case thesis that you want to put to the market. An investor has an investment thesis. And the only create is there alignment between their investment thesis and your business case thesis about why they're going to invest? And do they believe that you're the ones to do it if they've got that alignment? That's basically as simple as you boil it down. So just out of curiosity, for everyone that's on the chat, could just put into the chat bar for a second. By the way, welcome to all those new ones coming on. Put in the chat for a second, how many rounds of capital raising have you done previously? Just so I know where everyone's at. How many rounds of capital raising have you done previously before this session? Is it your first one? Is it your second one? Third? Okay, second, first, 0. Anyone else? 5+. Welcome, Ray. True warrior in the capital raising area. Second, 0. Okay, fantastic. All right, so if you've never done a capital raise before, you may actually believe the media talk about capital raising as the process of sending out pitch decks to VCs and then waiting for money to come back in. But let me just make it absolutely clear that capital raising is harder than what you think, right? And especially if you've never been through the process, even if you've been around the entire area. The truth is, let me have a check. There may be someone on this call today. Let me have a quick look. I know there's someone who's meant to be on this call today that actually made the biggest difference for me. And they don't know that they made the biggest difference, but it was after I actually met with them, right, that I realized that effectively capital raising was, basically what I realized. I remember it was 2018. It was the end of 2018. And I was thinking to myself, I really don't know the process for raising capital, right? Even though I've been promoting companies in the capital raise area for 10 years, I didn't know the actual end-to-end process for a capital raise. And yes, they're on it. I'll tell them afterwards who it is that made the difference. But I remember I was talking to them about my own raise, and I remember walking out of that meeting just thinking, I don't actually know the end-to-end process. And that's when I made it my mission to really think about, what does it actually look like? So for many of us, we have this expectation of capital raising as people just throwing money at us, right? The reality is by the time you get to the end of a capital raising, this is what you feel like, right? And especially over the last 2 years, as it's become a lot more challenging to actually raise money, right? It can be, as said, it can really test every bit of resilience inside of you and every sort of emotional capacity that you have. But ultimately, what is capital raising? If you really break it down to its purest essence, capital raising is just a marketing and a sales process. And the product in this scenario is the shares in your company, right? So marketing is about building a pipeline of potential investors or potential opportunities. And then the sales process is effectively, where the investors or the buyers get the opportunity to decide whether they would like to actually participate. That's all it really breaks down to. From simple numbers, you can see that, effectively one of the mistakes that people typically make is they try and do these high first minimums. What we've done, and we're about to update this and do it again, because I think it'd be really good to do, is typically a first investment in a company, look at this, 49% of people will invest less than 50K as their first investment into a company, right? And if you put it all together, basically, it's 81% will invest less than 250K as a first investment. So if you just set your minimum as above 250K, you are literally knocking out 81% of people. Now, if you run a fund, like a credit fund or something like that, that's a bit of a different story because there's actually a physical, a tangible asset, and that changes the picture. But the reality is, for a lot of sort of, early stage growth companies, that is what your investment profile looks like. However, the follow-on investment, whatever someone puts in as a first investment, is basically, the way you got to see it's almost keep me interested money and execute. If you execute, then investors are likely to want to continue investing in your opportunity. Or if they extract value from your opportunity in different ways, then that's also something to be mindful of. So the 4 principles that we articulate to everyone as far as capital raising is, number 1, get ready, right? Number 2, stay ready. Number 3, get to the fastest yes or no. And then the last one is always be raising. right? And what I mean by always be raising, it doesn't mean that you're always bringing money into the company. It just means that you're always engaging with investors. I found I have learned the most from my engagement with investors. I'm typically having conversations at least half an hour every day to 2 days with either an existing shareholder or a potential investor on my business. And it's all around different things. And obviously, I'm a bit unique because of the industry that I'm in. But either way, I find it super helpful for me. But this process, this is almost like a never-ending cycle. And to me, I think that people should think about capital raising no different to how they think about sales, how they think about marketing, how they think about product, customer success, etc. It's just a component of their business for them to actually focus on. Someone's mentioned, so Ray, just so you know, this is being recorded. So we're happy to share this sort of afterwards as well. Okay, so 3 stages of a buyer decision. Typically, it's awareness, consideration, and then obviously the decision, right? So the awareness is the process of unknown to known. Then it's obviously the consideration component, and then when they actually make a decision. A lot of people think it's just awareness to decision, which it is clearly not, right? So our role as founders or as a fund manager is to effectively go from an unknown to a known, and then to create engagement. Right. And by the way, all this is in the context of getting the most out of CapitalHQ, just to make that clear. So effectively, the first stage is you've got to become known to your potential investor and then obviously engage in the actual process. And the thing you'll say is if you don't make the process streamlined for the investor, then you will lose the investor, because the reality is we are all competing for capital, right? And that capital, knowing that investors can invest their money in any single opportunity, our competition is Bitcoin, Ethereum, Tesla, CBA, you name it. Like our competition is, different credit opportunities that are coming out at the moment. We are always competing for capital in various different directions. So be absolutely clear that our job is to make it as streamlined as possible. And the other thing I've noted is that many investors often invest in this space, also have commercial activities in the space as well. So a lot of people, they get interest from, accountants, lawyers, advisors, consultants, etc., and they just don't communicate with them because they straight away think that they want them to be a client of theirs. Now, in some cases, this could be accurate, but in reality, for myself personally, I count all of those as actual shareholders in my business. Right. And I've also seen it plenty of times where they're also shareholders in other businesses as well. The way you got to see it is just because an investor is wealthy, it doesn't mean they don't need to generate income, right? The fund structure allows the investor to create a fund which basically has a 2 and 20 model, which the 2% allows them to generate income. When you're dealing with private investors, they also have businesses typically which generate income for them. So it's not they're just sitting there on a wall of money just waiting to invest. Said everyone's got expenses and lifestyle that they want to maintain, keep, etc. So they're also generating income as well, right? So the education I typically provide to people is you should be thinking about how your capital raising can work 24/7 for you. So the exact amount of time that you spend is less than, is 80% less than what you normally would. Right. So you can actually focus on the strategic nature, of your core business. Right. And just to give you context for myself personally, right. So many of you know that I'm actually middle of a raise myself. I'm actually in the UK at the moment. We hosted a conference last week in the UK. Right. We've got 2 big conferences coming up, and we've got a whole stream of different CapitalHQ initiatives taking place. And the only way that I can do that and also go through a raise at the same time is because of the way in which I'm structured, that lets my information room do the work for me. But I've done the work in the preparation component, hosting information sessions, etc. So this part I find really important. How you articulate yourself is super important, in that your elevator pitch is more, in fact, your headline pitch is more important than your actual pitch deck, because many people don't even get to the stage where they get the opportunity to send out their pitch deck to someone. So the "do you know how what we do is" statement is very, very powerful to get right. In fact, I was at our conference on Friday. I was saying to a guy, because I was helping him with their messaging, And I said, you are absolutely best to basically spend a day with you and your team and make sure that you do not walk out of that meeting until you get your headline right, as far as the statement of what you do. Ours is, basically AI-driven private capital markets, right? That's our one. Basically, when you can come away with your elevator pitch and your headline statement, that changes everything. Right inside the actual Capital HQ, if you're obviously as a paid client, make sure you set yourself up right. And obviously our customer success team can assist with that. But effectively, make sure your keywords are right to attract the right type of person as well. Right, you can see I've actually updated mine. It used to be just on the capital raising front, but we've actually reset the positioning of us as a business. So setting up the deal room, right? This is the way we like to think about it. Your hero text, your headline statement is super important. If you notice how we've all been conditioned to consume content, like YouTube, for example, I spend hours on every single week. I'm sure many of you do as well, right? We're all driven by those thumbnails. So see the little thumbnail on the left-hand side? We've all been driven by that. So that's why I articulate in that. If you go have a look at now, I've updated mine. That is the first point of call that someone actually sees about who I am and what we do, right? And that's got to be different. How you sell your product to a customer is very different to how you sell your investment opportunity to an investor, right? So an investor first sees the hero text and the headline statement. Then it's the elevator pitch. I would even argue that there's probably a sort of one-line statement after that. Then it's typically your investment highlights or your capital raising brand elements. These are typically your social proof statements, right? So these are things like who are your shareholders, who are some of your customers, what is your growth rate, your traction metrics, etc. They are all your sort of social proof elements that you can articulate in the business. And then lastly, it's your pitch deck. So in the actual overview, right, you can see how effectively the way in which we've thought about this is empowering AIDA. What that stands for is attention, interest, desire, and then action, right? So your problem statement is at the top, solution statement next, right? Why us? Why are we the ones to do it, right? And then the next one is the actual capital raising brand highlights, right? And so for me, so when I put this out, I don't put this up flippantly. Like I have literally spent hours and hours and hours thinking about this structure, watching what other people are doing, watching what brokers do, watching what investment bankers do, etc. Everything is done in a very specific reason. And then, part of what our job is to do in this unknown to known process and building awareness, it's how can you build the strengths of your board? How can you articulate about the assets on your team? How can you share about who your existing investors are, awards that you've won, any grants that you've received? Like you notice with listed companies, they're always articulating any grant funding that they receive, whereas as private companies, we typically don't do that, right? Sector, if you're in a growth sector, there's the old saying, a rising tide lifts all boats, right? So make sure you articulate that. And whatever your impressive metrics are, make sure you articulate that. So if it's growth rates, if it's a certain type of customer, if it's user metrics, whatever they are, they need to be sort of built into how you articulate what you're doing. So on there, so we recommend to have an investor relations page on your website. I learned this from a client of mine. So one of my clients, they've raised literally millions off the back of their investor relations page or the become a shareholder page on their website. I've personally also experienced investors coming off this page, filling out a form, and then investing into my business, right? So frequently asked questions. So this is structured in and I said the reason I send this out because I do have to go through this quickly. Effectively, these are some of my top frequently asked questions. You can see some of those numbers. These are old now, given that's my Explain the Valuation is now up to 160 something. But effectively, these are some of the core things which you need to articulate, and this correlates with the potential of the opportunity. First thing investor is always trying to understand is the valuation, and is there any references for that? Then they're trying to understand the business model, either how you make money now or how you plan to make money. The top 3 business growth drivers, when I speak with founders, they typically go in all sorts of tangents about how they're going to drive growth. I suggest you basically have 3 core growth drivers, and you typically do not go above that 3, because it's very, like, if you think about the way, marketing, I always tell people to think in biblical terms. The Bible, people always use numbers of 3, 7, 11, etc. Well, when it comes to raising, I find the number 3 is just really, simple. It's to the point, and the brain can sort of absorb it. And if you're a technical business, then you've got to highlight what are your 3 technical milestones of de-risking or data milestones that create value inflection points. And so these 2 points are all around how do your growth drivers basically help you articulate that the investment that an investor is going to put into your business is going to correlate with the growth, the driving of growth in your business, which will ultimately correlate with the value creation of your actual opportunity as well, right? And it's your thesis on what that is, right? And then obviously the potential exit path for investors. And then also the next one being, what is your actual business moat? Like, what actually separates you from all the other companies out there? Like, for me, as an example, I always get asked, I see lots of capital raising platform. What makes you different? Right. And that's very easy for me to answer now. Or who is my competition? And I'm sort of a bit unique in that people can't actually quite put a finger on what my competition is. So I articulate what I lose business to, not, what other people perceive as my competition. So, make sure you articulate that. Building your news, to me, in your news tab, we've made it so easy. So it's just copy and paste. Like, you literally can do a LinkedIn post, copy it, paste it, stick it in there. The important thing about this is that all these different things that we're sort of articulating here, it's like every time an investor comes to your deal room, they can spend the time and they can see how well you've actually executed or what you've actually executed on. And then it's over to them to think about, is that in alignment with what I would expect? Would I expect more? Would I expect less? And they can, make up their own sort of mind and their own decisions. But your job, rather than trying to sell, we've achieved this, we've done that. When you set up your feed highlight, it's just there. And I always say to companies, you get the most value out of a software like ours, not in like the first 3 months, which is when everyone wants a sort of quick hit, right? It's typically after years, when you sort of build up years of milestones, years of track record, that an investor sort of new coming to your business can literally log in and see how you've performed over the last 3 to 4 years, before they ever met you. Or if they've been following you for some time, basically a recap of what you've actually done. Now, distributing your announcements, an ideal cadence is to be communicating sort of every 1 to 2 months, right? And you can do that through the investor relations feature, either posting to your news feed, and then obviously the pinning the significant news items to your overview page. So those 3 little burgers, those 3 little burger dots on the right-hand side, you can click on that and you can pin that, and that will then go onto your overview page. So when an investor comes onto your page, they can see what's, the summary or the attention, interest, desire, action components, right? And then as they scroll down, they can see, okay, here's your execution milestones as well. So now I was going to dive into pitch decks. So something like itchy nose. The key components of your pitch deck is effectively, I'll just highlight an area that people don't really talk about, is the use of funds. And once again, the use of funds, make sure it correlates with your top 3 growth drivers or the technical de-risking of the business, right? As I said, the most important thing is that when you're articulating an opportunity, that an investor can clearly understand how capital is being used to grow the value of the business by your top 3 growth drivers and what those metrics look like, or what are the data points or technical de-risking points, and then what does that value creation element look like, right? So often people want to say, if I want to raise $5 million so we can get to this milestone. Well, the question is why? Like, if you're able to get that data set, what does that mean for the value of the opportunity? Right? Is it a 3x increase, 5x increase? Like, what does that actually mean? Right? Often they know in their head, but they're not articulating it in their actual communications. So the next stage is, basically start building your investor list. So when people typically deal with us, they focus on, attracting our investors to their opportunity. we do a really strong job of articulating that the platform is not just built for our network, it's also built for you to invite your own potential investors into as well, because this is about streamlining and simplifying your own capital raise. So these 4 elements, effectively what you actually start with, and spend the time to actually create that list, right? And then actually spend the time sort of engaging and communicating with them. Now, when you invite people into your deal room, you can do that via email up here, right? Or you can just add in their email one by one, or you can actually get a link. My actual exact process I do is I add someone's email here, and then I also send them the link, and I just put it in a bracket, and I just put information room, and I put that in a bracket with that, and I hyperlink the link in there. So that way, when they go to click, the room should already acknowledge their email address, and they should be able to get either direct access, or it's like literally one click and then they're able to get in. Now, if you want to invite more than one person in, so say, for example, you go to, you're at a conference, or you meet a whole bunch of investors at one time. Typically what you can do is you can just add their emails, invite them in, and then effectively I suggest you send them a separate email saying, "Hey, John, Mary, just a quick email to let you know I've invited you into our CapitalHQ information room," right? Inside that room, we're going to be keeping you up to date with some of our milestones, and also the investment opportunity for the company. And also it has in there a range of frequently asked questions, etc. So it's just a really simple, and we've got templates for that, by the way, inside the capital raising success room for those of you that are clients of ours. Now, effectively, simple principles, it sounds stupid, but effectively, more investors you have in the room, the more you'll raise. Like, if you realize, if you keep going back to it is a marketing and sales process, right? I know everyone likes to think of themselves as, oh, I want to take a sniper approach. That's great. Come back to me in 3 months and let me know how you go with your sniper approach for raising, right? But effectively, the more investors you invite into your room, the more you raise. Also, the most beautiful thing is when you go to a wider network, when you realize all these people that you've never met, you don't know before, that have got incredible backgrounds, are expressing interest in your opportunity, and you're connecting with them. And you realize that it's not just about the money, but there's lots of different strategic, and like I literally just got off a call with someone who I had from someone who's on this call right now, who they did an introduction to. And that same person is connected to, another one of my shareholders, and also another one of our clients. This is a very, very small world, and said the more people you can engage with, the more connections you create, and you create your own little network effect. Yeah, so I've already highlighted these parts, and this one's the last one is probably the best way to think about it. Whenever I send out email communications, I always think about it. Even if I get no replies, I always think about it. I am planting seeds for the future. Right. And I said, I've had situations where I've had investors follow me for 2 years and then participate. I've had ones where they've followed me for 4 years and participate, some even longer. Right. So before we even built the platform, right, it's just a consistent process of planting seeds. Right. But the outcome is that, it's allowing people the opportunity to engage with your business. And that's fundamentally all we're trying to do, in this process. Okay, so email invitation, I won't spend too much time on that. As said, this is in the capital raising success room. I've literally built out a bit of a conversation flow. I'll have a look at it, see if we need to update it since we've done CapitalHQ, but it's fairly straightforward as far as, we just want to give you sort of simple things that you can send to people, and you can build processes to actually do it. When you go into the promotion of your capital raise, and you'll notice that I'm doing all of these, right, except for the industry publications. Right, information sessions, actually I'm not doing media either. I'm just doing basically information sessions in our platform. But it's just a process of that promotion is giving people the opportunity to engage, with your opportunity, and also giving you the opportunity to build relationships with your potential investors as well, right? Because I said, often the relationship goes a lot further. We do provide investor access inside the actual marketplace. I've got my good friend Matthew there. Effectively, when we provide that investor access, we do obviously got a marketplace feature. We do email promotions. Obviously, there's our conference and events. We've got the CapitalHQ network, and then also we've done an API integration with Crunchbase. And the purpose of us doing that is so that it just provides, effectively, if you want to reach out to investors outside of our ecosystem, there's 200,000 additional contacts that you can access their profiles and then sort of reach out to through it. So when you're in the presentation, typically presentations are either one-on-one, it can be in sort of conferences, virtual showcases, industry-related events, etc. It can be boardroom sessions. Either way, that process of actually engaging people and bringing them into different sessions is super important. And when I said to you, think about an investment bank, just trust me when I say they do all this sort of stuff. They do the one-on-one conversations, they do the wine and dine, they do they do all sorts of probably not the pitch competitions, but effectively, they host conference calls, host information sessions. They call them slightly differently, but you get the idea. As a sort of note to any founders, I had a lunch with a potential investor, and there's someone I know. There's someone on here that will know the person I'm talking about. I had lunch with him, and for an hour and a half, I passionately talked about all the adjustments we were making to our product and how we were supporting our clients. At the end of that hour, he said, "Thanks so much. Really love your passion." He goes, "I just want to let you know that I will not be investing." And he goes, "What I really want to understand is what's the vision that you see?" I said, "I really appreciate you're passionate about your product, but what is the vision that you actually want to see?" And so that was a super expensive lunch for me, not because I had to pay for the lunch, it's because I basically, killed the potential of them investing into my business from my mistake. So when I made that mistake, I thought I will share that with everyone so that others don't make the same mistake that I did. So gaining insights is important when you're using the software for your deal room. It's good to know what investors are looking at in your room. And so it gives you insight on what is most actually important to them. And this definitely does sort of change over time, right? And especially as your business changes and as you sort of adapt. But when you get those insights, it means that you can take action on those and you can understand. Also, it's important to know what your investor is actually thinking, because effectively often when they're looking at frequently asked questions, they will often ask a corresponding question in relation to those frequently asked questions. And from our perspective as founders, we just want to be more prepared, right? We want to make sure that we're prepared for different conversations, or that, if we haven't quite answered it correctly, we want to improve the answer to that question for a future investor, because I think our job is to try and answer investors' questions before they ask them. And then you'll see there is a direct correlation in your room between engagement and also the actual ultimate transaction success. And I've seen this with my own room. I think it's a bit more now, but literally out of the sort of top people in my room, there's only one that hasn't, and from a points perspective, that hasn't actually participated as an investor. So reason why you should always be raising, right? This is an example from a few years ago of an investor who was looking at us, right? And effectively, you can see that across a year, the different engagement points with the actual room. So this to me sort of really articulates why, having your capital raising working for you 24/7 allows people to engage, when you're not actually talking with them. So after you set that up, just monitor that. And the visualization benefits, as I said, your conversations can go from what was previously for me 3 to 5 hours down to sort of 30 to 60 minutes, right? Because you're allowing people to get access to what they want before they ask for it. You can improve your conversion rate, right? And this is of meetings to actual investors. And once again, it's not because you're saying anything different or because you are smarter or anything like that. You've just created a process which is a lot more relevant in how someone wants to experience your opportunity. So loss aversion. So just highlighting that every time an investor invests into your company, there's 4 risk factors for them. Most people just think of the money aspect, but actually the risk factors for them are money, time, reputation, and then also the last one, another opportunity. So what that means is that, they could have invested into another company, which could have done 100x or 1000x, etc. So if they've invested into your business and, effectively they could have put that money to another, they had a choice to put into another one that did better, that's their opportunity cost. So always have that in mind, that this is not just about you and your opportunity, but this is also about their loss aversion in that, it's not just about the loss of money, the loss of time associated with it. There could be a reputation aspect, right? Which is sort of less and less relevant because it is, if there is challenges, it's sort of common. But the biggest one is this, the opportunity cost that they could have invested into something else. Now, in the psychology of the actual process, know that investors don't want to be the first one in, but they also don't want to miss out, right? So there's often a bandwagon effect which goes along with it, right? And then the last part is typically the fear of missing out is always a driver when it comes to raising capital, right? And you need to know that sort of as you're going through it. So you see a lot of sort of capital raisings, they sort of, when people do IPOs, the most of the money for an IPO typically comes in within the last week. Up until that time, people are giving indications, expressing interest, doing all sorts of things. And then typically the majority of that money comes in the last week. So from the investors process, when they invest into your business, right? If you're a fund, a property fund or a credit fund, then effectively you've got, targeted returns that they're sort of after. For the venture businesses, you basically need to articulate how you are going to create a 5 to 10x opportunity for that investor, right? That's what they want to understand, right? Or a short-term uplift, or the last one is a path to a potential exit, right? So they're the kind of things that investors are going to be looking for. So it sounds simplified, but typically people always ask me about valuation. It's the one area I don't really sort of comment on because it is very, very hard. But just have this in mind from the investor's perspective is what does it look like for them if to achieve a 5x to 10x return? What can a short-term uplift look like? Or what could the potential exit look like in the actual process? So common mistakes, right? Overconfidence is a big one. It's probably the biggest issue we have to deal with on a day-to-day basis. Unwillingness to invest in the process. This is time, money, energy, right? Because as I said, people are being conditioned that capital raising is create a nice pitch deck, what they perceive as nice, send it out to people, and then watch the money roll in. And it just doesn't happen like that. Reliance on one investor, right? So people often put their entire capital raise on hold because they've got one potential investor. And then the last one is no time pressure, right? So these are the simple common mistakes that people make. So successful capital raising, typically analyze, refine, improve, repeat. Like you're always got to be looking to go through this cycle. And this is, I suppose, really anything in life that you want to get good at, right? Just analyze how you're going, refine your process, improve it, and then obviously repeat that cycle. And the benefit goal is you just want to have some level of confidence that you can raise money going to a capital raise, because sometimes it can really feel like an all or nothing process when you go into a capital raise. So, having some sort of confidence that what you are doing is, it doesn't have to be perfect, but at least on the right track, right? Which is why I spend a lot of time now with people on their positioning of their business, because I personally struggled with that for myself for a long, long time. And I was super lucky that I had Kenny Wong, one of my shareholders, like 15 minutes before I was come on stage, he gave me my tagline, and that changed a lot for me. That helped in clarity of direction. It helped me in how I articulate. Like, never underestimate the power of your headline or your hero text for your business. It can shape so much going forward and how much different it makes you feel at ease when you get it right. So summary, how to get the most out of your capital raise or out of CapitalHQ, right? Set up investor-friendly content, structure and present it in a way which appeals to investors or gives them the opportunity to engage. Invite them to your room, be proactive about it, not just from our network, but also just in day-to-day conversations. Share progress, share milestones, and be consistent. Like, it's pretty straightforward, but as I said, this whole ecosystem has been geared that the pitch deck is the most magical document in the world. And it's imagine this, for all those that build businesses, imagine saying to a salesperson that effectively all you need to do is when a lead comes in, send them out a brochure and just wait. Imagine that. That's exactly how everyone gets taught about what capital raising is. And then imagine telling that salesperson to go for the top 1% of client. That's the hardest one to get, right? And that if they don't get that, so anyway, it's very frustrating. So just some activities coming up for us, which may be relevant to you. You know, we expect to have anywhere between sort of 400 to 500 attendees at our Venture and Capital Conference. It is the second largest conference that we do each year, Emergence being the largest. This is the second largest. It's a one-day event. We've got Steve Baxter as a keynote speaker. We've got the Honourable Jackie Munro also as a keynote speaker as well for the conference. So that will be a big event at the Four Seasons. So we're taking out a 5-star hotel. You know, there's 3 different opportunities for networking. You get the opportunity to present at it, etc. So reach out to me about that. And if you're a crypto, blockchain, or an AI business, then we've got a conference absolutely dedicated to you. This will be an absolute fun one. It's actually 20th of August, not 21st. That'll be at Sydney. That will be at the Sofitel Darling Harbour. So absolutely beautiful venue. So once again, we expect 400 to 500 attendees at that. We'll be announcing some big name speakers very shortly. So if you're in that area, that is relevant for you. Now, I'm going to go on to the next part of this, where I'm going to get into the fun stuff, is how to actually utilize AI for your actual process. So this will be in our last sort of 12 minutes. By the way, just to check in on everyone, is everyone enjoying the session so far? Just put a message in the chat and give me some feedback about how you're finding the session so far. I know I've got to cover a lot of topics super quick, but yeah, any feedback in the chat is always welcome. Brilliant. Good to see. All right. Nice. Okay. And also some familiar faces and names, which is always nice. Okay, so finish off. This is the last part. So once again, fucking AI and software, you must use it. It turns you into a superhuman as far as what you can do. If you want to work and you want to find out, if you want to test the potential of yourself and your business, if you are not using it, it is the greatest mistake, right? So firstly, the prompt structure. I'm not going to go into the details of this, but this is the ideal structure of a prompt, right? As far as where you have to articulate, because what it does is it really helps simplify for the actual, when you're dealing with AI, it helps it know who it wants to be and what is the outcome that you actually want from it, right? So basically after this, take that prompt structure out, and I'll give you an example of one that we actually used, right? So for me, what I've done is we've now done, like, our team's got this so well set up that not only are we building it into our actual software, but as part of our onboarding of our clients, you know, and they're basically helping companies create this content straight off the bat, because we've built our prompt structures into other tools so we can actually do it manually for our clients. But effectively what this means is you can create an email structure which is relevant to investors, which covers off all the points that I highlighted, right? And it just gives you, once again, that sort of confidence around how you're actually positioning yourself with your own raise, because that's always one of the hardest parts, right? So, you know, keeping that really simple, you know, effectively makes it easy for you as well as to know how it's actually to be structured. And said, we'll share this with you so you can actually copy it, right? Make sure your brand highlights are included. Now, all these elements, these are all the social proof elements that I've been talking about, right? So you highlight all that and you just keep it, I said, once you get, and you can test it, you can add different, basically what you need to do is you need to make sure that you can upload your pitch deck, or you can at least enter in this type of information in it so it can then go do its work and actually create it. I will have one very specific point. With your output, make sure the tone is simple, personal, professional, and without hyperbole. You need to say it in that exact structure, right? Simple, personal, professional, and without hyperbole, right? Because then it has a lot more natural tone. For me, whilst I use ChatGPT a lot, I find my content comes out a lot nicer in Claude.ai, right? For whatever reason. I am anal about the custom instructions that I set up, and I've done another video on that previously on custom instructions, which I think you can find in the customer success room, in the capital raising success room. You can actually find that there, right? But it's really designed to make it super easy for you to basically, people always wonder how WI does so much as a small team. let's be absolutely clear. It's mandated from me right across the entire company about the utilization of AI and software, right? Because effectively, I take the attitude that if we're not using it, there is someone else trying to take our spot that is likely to be, right? So our team has to use it. Make sure you give it as much relevant information as possible after you're finishing it. So I always start with getting a right first introductory email, because then you can create all your content from that, right? So you can create information session invites, follow-ups, reminders, all that sort of stuff. And then you find yourself getting into a systematic routine. I want to make sure that I get to the point where I get at least a score out of 9 or 10 across 2 different AIs. So I need to get a score of 9 or 10 either across ChatGPT or also on Claude AI as well. I said, you may not be as nuts as what I am, right? But when I say, it makes a massive, massive difference. I did a sort of shareholder update for us. The transformation I've been able to make with our business, right? Utilizing software and AI. And I tell you, I don't know how we would have done it without ChatGPT and without different software solutions. And the best part is I've got a tech team where I let them know different friction points that we're experiencing, and then we aim to solve it with software and AI internally. And I just say that because ultimately, the outcome we want you to do is have a successful business. All this sort of stuff, it can create it for you, right? And with the shareholder communications, this sounds crazy, but my favorite journalist is Yolanda Redrup. I really love her content. I love the way she structures it. So I basically put in her articles I did use Gemini for this one. Not too much I use Gemini for, but this I did. I put her articles in Gemini and I asked it to basically provide me with the structure of her articles and how she writes them. Then I built a prompt around that. And then I've got an article stream for all my content exactly on how she writes it, right? So that's the sort of level that you can go to when it comes to creating content with AI. Right. And then likewise, all your other capital raising material. I said, just utilize, it is a tool to make your life. It doesn't mean you're cheating, right? You're doing the nuts and bolts. It's just doing all the filler stuff. That's the way I sort of see it. And you still have to use your intelligence to finish off different things that come offer and make sure it's got the right tone, right messaging, right words, etc. But ultimately, it is doing, it's like, the way I think about it is every different chat stream I've got, it's like a different employee that I've got designated to a specific role, right? And so, I created a capital raising GPT and that's its function. I do not mix any other content with it except for specifically related to capital raising. And that makes my life so much easier. Also, you can simplify a lot of your repetitive tasks. Like if anyone's ever booked a meeting with me, typically I use Calendly, right? If you booked a meeting with me in Calendly, the inside of that, I've got a bit of a message with 2 videos in there, right? That helps me sort of streamline a lot of the because I said often I get asked a lot of questions. So I'm trying to preempt those questions and I'm trying to get those answered before I get asked, right? So you can simplify this with tools like, Apollo is another big one. That integrates with Gmail really well. So effectively, you can set up snippets, which is if you find yourself saying the exact same thing over and over and over again, you can just add a little snippet. I have to do a lot of follow-up emails. So I've got a follow-up snippet. Templates. I've got templates for pretty much everything, right? So it just means that I can be like for this. So I'm going to finish this session in like 4 minutes. After that, I've got to send out communications to the 7 meetings that I had earlier today. That's all structured in templates, right? I have to select which different template I'm going to send and so forth. But effectively within half an hour, I can have my follow-up done, right? So basically by the time it's 9:30 a.m., I would have done 7 meetings, an hour webinar, and I would have done my follow-up emails to all those, right? To the people I had meetings with, right? This is how efficient you can become. And then sometimes with sequences, where they're really helpful is if you have to send out the same email to 100 people or 50 people, etc., you can effectively set up a sequence and you've got to make sure it sounds really personal and so forth. And effectively, it just means that you can basically insert it once, hit send, it's all done for you. And it's all looks very, very personal. Like it's like it would come from you, writing it yourself. So these little productivity hacks, absolute game changers. And I say that, do you think, well, why are you saying it? Because I want to find out what my potential is. And I imagine that's why you all do as well. It's why you're sort of raising funds. It's why you're building businesses, right? It's like a lot of us, we end up spending hours in gray area stuff. This is just helps us keep relentlessly focused. I said, this is my little email that I send to people, right? Because I want, it said it's helpful for me in having, before I have a conversation with someone, but you can see that in my software. And that's the end. So I've got 3 minutes. If anyone wants to ask any questions, I'll have to be super quick on it. But that's my email address, which you can reply to. I'll send a follow-up email sort of later today. And look, if you'd like to participate in one of our upcoming activities, we also do have a CapitalHQ online investment showcase, which will be on July 5th. We just updated it. And yeah, we've got the Venture and Capital 2024, and also we have the Digital Asset and AI conference coming up. So we are having a massive next 3 months. And the reason is because, to me, as I said, I think this year sets the foundations for some incredible financial opportunities over the next couple of years. So we want to make sure that whether it be companies and investors get the best of both of those. So just in the last sort of 2 minutes, feel free to ask any questions. Any questions outside of, will I send through the presentation or do you get the recording? Yes, you will. All right. I must have covered everything in detail. It's rare for me to finish on time. Okay, looks like we've got no questions from anyone. Thanks, Peter. Appreciate that. Yeah, I'll tell you, it feels weird to be this productive before 9 a.m. All right, I will finish it there. Just want to say thank you, everyone, for your time. I really appreciate it. And I said, we're going to record this. We'll send this out to everyone. And look, I said, I hope, obviously, I'm talking about how to get the most out of CapitalHQ. The reality is you can take and apply that sort of in other areas as well. My hope is that you utilize our software and AI, take it to as much extent as possible, because I said, we've spent the money, we've made it in such a way that everything is streamlined, simplified for both sides. And we basically, our job is about empowering the ecosystem. So on that note, thank you so much, everyone. Glad you enjoyed the session, and look forward to seeing you all shortly.